Please join me in the Pledge of Allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Like to make him, or have a motion to excuse Councilman Sherman and Kirkman from this meeting.
I'll make a motion, we excuse them.
Second.
Coons,
Yes.
Redcliffe,
Yes.
Bondegaard.
Yes. Any comments by the public? Oh, wait, I didn't say Open Meetings
Open.
Act, did I?
No.
Yeah, the Open Meetings Act is over there. Sorry about that. Approval of council minutes from February 11th. A motion.
I'll make that motion.
I'll second it.
Radcliffe,
Yes.
Bondegaard,
Yes.
Coons.
Yes.
And now we are to the audit presentation.
What we're all here for.
Yeah.
All right. Yeah, so first, thank you guys for letting us, yep. Okay. Yeah, so first, thank you guys for allowing us to do the audit again this year. And also, big thanks to Kegan and all of the office staff for all of their help in getting the audit completed. Like the last couple of years, it went smoothly, and everyone is always really responsive and helpful whenever we need anything, so that's always appreciated. So as far as the audit goes, I guess we always start this with, there's kind of two main components to what we try to do with an audit. So the first component is just issuing an opinion on the financial statements themselves. So that opinion is addressed in this independent auditor's report, which is towards the front of the audit. And what you're going to see here is, in our opinion, the accompanying financial statements referred to above present fairly in all material respects the respective financial positions. So essentially what that means is that's a clean opinion, an unmodified opinion. Like I said, the audit did go smooth. As far as the number of adjustments that we made, it was actually down a little bit compared to the last 2 years. So that's always good to see. I think there was maybe 10 or 12 fewer adjustments than we had in the prior year. So again, that's the opinion on the financial statements. So then the second component of these governmental audits that we're required to report on is related to internal controls or compliance. So this audit letter is going to be found all the way at the back of the audit report. And basically what this says, and I guess what we're happy to report, is that we didn't identify any deficiencies in internal control that we'd have to report on, and there was also no compliance issues that we identified. So with a lot of the other audits that we work with, some of the school districts and stuff like that, some of the common compliance issues that we see is they may go over budget without properly going back and amending the budget. We didn't see any budget violations in the audit this year. Another common one that we see is every once in a while there's some accounts at banks that are improperly collateralized. I do believe that was an issue last year, but again, nothing this year. And then probably the biggest non-compliance issue that we'll see every once in a while is payroll tax liabilities being made late. That's one that you definitely want to avoid at all costs. And again, with all of our payroll testing that we work through on KIN, everything was being made timely and accurately. So again, no compliance issues. So that's what's disclosed in those two reports that are contained in the audit. The other thing that you guys are going to find in the audit, it's just inserted in there loosely, is our management letter. That's where we will comment other things that aren't necessarily internal control related matter or a compliance related matter, but things that we think we need to communicate to you. Really, the only thing that you guys are going to see in there is we do have a comment that says the city does not have a system in place that provides for the preparation of the notes or the financial statements. So I talked about this a little bit last year because we have changed the wording of what we're saying with that. But basically that's in there because us as auditors are preparing the audit report, the entire thing, the financials and all of the notes to those financials. So ideally, you know, it's the company or the municipality that would be drafting those, and we would just be coming in and auditing it. With these smaller municipalities, that's not uncommon to have the auditor draft those items. But we do have to put that in there because it is somewhat of an independence issue. So, you know, how we get around that being an independence issue is, you know, us three are the main ones doing the audit work. Jeff's writing up the audit report, and then we have Rob come in and do an independent review of the audit report itself. Other things that we do is any adjustment that we make, we have to go over all of those with Kegan and David and get their approval on them. And that's how we get to the clean opinion on the financials. You know, we go through those adjustments. They either agree with them or disagree with them. They accept them, and we make those adjustments. We haven't came across it, but if we did have a large adjustment that we felt needed to be made and they, for whatever reason, thought we should not be making that adjustment, that's when you start running the risk of us not being able to issue a clean opinion. But like I said, all adjustments that we did make were approved by David and Kegan. The one thing about that system that you guys have, and I think that we've really tried to encourage over the last few years, and it's definitely improved, but it's just, it would help us reduce the amount of adjustments and make the audit go a little bit more smoothly if there was a little bit better year-end process in place when it came to, you know, your year-end adjusting entries. So there's some adjustments that we're making, for example, like accounts payable. You know, Lori and the accounting staff, they go through the process to identify all those invoices that are out, you know, for services that were performed or products that were received before year-end, but the invoice was paid after year-end. But then, you know, there's years that we go in and make that adjustment. And then same way with like accrued payroll. You know, we're going in, Julie's going in and putting that accrual together. Same way with, you know, health insurance payable claims that were incurred before year-end, paid after year-end. There's a lot of things like that that we're making the adjustment for. And ideally, we would like to have that part of the city's, you know, year-end close process. They make those adjustments, and then we come in and audit it after the fact. That's where the independence, you know, gets a little blurry because there's certain things that we're making the adjustment for, and then we're also auditing it. So, but again, like I said, it's improved a lot over the last few years. You know, at one point, economic development and a few of those other small funds weren't even getting posted in Cassell. We were, you know, basically recording that activity off of the spreadsheets. You know, the accounting staff is now doing that. So that's the one room that I say there is for improvement, is just continue to refine that year-end close process, maybe come up with a checklist of this is everything we need to do, and that will reduce the amount of adjustments that we're making at year-end, and also make the financials that you guys are looking at, you know, throughout the year closer to what the final audit report is going to show. The only other, and then during our exit conference, there's a lot of points that we go over and things, you know, we talk about room for improvement, stuff we believe they need to monitor, whether that be, you know, those assessments and some of those things out there. But the one I think that we did discuss with them that is probably important to bring to your guys' attention too is the self-insurance reserve for health insurance. That did decrease by about $300,000 this year. You know, and we expect that to fluctuate from year to year just based off of the number of claims with it being self-insurance. But really that big decrease this year of $300,000, that was almost entirely driven by the decrease in premiums that you guys had from fiscal year 23 to fiscal year 24. You know, it's maybe not that concerning because it wasn't that long ago that Rob was reviewing that audit report and he was asking, you know, do you guys have too much money sitting in that insurance reserve? So, you know, maybe there was some room to bring it down, but it sounds like after year end, it's kind of continued to decrease. So that's just definitely something you guys are going to want to monitor. And, you know, if there's changes that need to be made to the premiums or whatever it be, just make sure that's being monitored. I think that was really all I had as far as, you know, internal
Trevor,
control.
you- just to clarify on that, you said the decrease in premiums? Like decrease what we're charging the employees, or?
Basically, the premiums that are funding that insurance reserve, that's what decreased. So I believe a portion of it, a large portion of it is the employees' share. You know, there was a decrease in what you guys were charging employees. But with that, there was also a decrease in the city share that was funding that reserve. So, you know, it basically resulted in, you know, $25,000 to $30,000 less each month funding that reserve account. So there wasn't a huge change in claims. I mean, they did fluctuate, but it was really the reason that reserve dropped so much is because there was less funding going into the reserve account. So, you know, and like I said, whether it was the right decision to decrease those premiums or not, you know, maybe looking back, it was too much of a decrease. Like I said, that reserve was awfully high at one point, but it's not anymore. And it's just one of those things that you have to look out a little bit and not get behind the ball on.
Oh, okay.
Any other questions on any of that stuff so far? Compliance or internal controls or adjustments? Okay. So the next few slides, really just going to try to go over some of the basic financial statements and try to point some things out that I think is helpful, but really it's just going to be a high-level review. So at the bottom of all of these financial statements, you know, you're going to see this here, that the notes to the financial statements are an integral part of these statements. So, you know, looking at these statements themselves, a lot of times isn't that useful. You really got to read through all of the notes and take the entire audit report as a whole to try to get the best picture of what's going on. But I think these 4 or so financial statements here that I do have are going to kind of show at least, you know, how things are going. So this first financial statement is referred to as a government-wide statement of net position. So essentially what this is the balance sheet for the city as a whole, all funds combined. It's broken out into 2 columns here, and what this is governmental activities. So that's going to be, you know, general fund, capital projects fund, street fund, economic development fund, and then business type activities, which are your proprietary funds. So we're talking electric, water, sewer, and landfill. So that's how this is broken out. The main things that I'll point out on this is, as far as governmental activities go, total assets, they did remain relatively flat. I think there was a less than $200,000 change in that. And total liabilities did decrease by about $609,000. For business type activities, total assets increased by $1.65 million, and total liabilities decreased by about $418,000. So again, that's government-wide statement of net position, basically the balance sheet for the city as a whole. You know, what that'll show is total net position as of the end of the year was about $93 million. So this next statement here, government-wide statement of activities, so where that first financial was basically the balance sheet of the city as a whole, this is the income statement of the city as a whole. A couple things to point out here in the general fund, or I should say governmental funds or governmental activities. When we talk about revenue, it's going to be charges for services, operating grants and contributions, capital grants, and then, you know, the various taxes and things that are collected here. So when you look at total revenues for governmental activities, it did increase by about $200,000, which was right around where total expenditures for governmental activities increased also. Then when you look at business type activities, so that's made up of nothing but charges for services here, basically utility fee collections. Total revenues was relatively flat, which makes sense. You know, there were no rate changes in the prior year. I don't think in any of the proprietary funds. A few years ago, there were some increases in landfill and maybe water and sewer a while back. But again, so that stayed relatively flat, but expenditures did increase in those proprietary funds by about $416,000. So the main thing to point out on this financial statement, like I said, the ending net position of the city as a whole was about $93 million. So that was about a $2.8 million increase from the prior year. Overall net position of the city was a $2.8 million increase. So, you know, I think what this next slide is going to show is, okay, well, you know, how are we doing? How are things trending? So all this is showing is just, again, government-wide, so city as a whole. This blue bar is going to show the trend in overall net position, and then the red bar is going to show the trend in overall liabilities. So obviously, the main takeaway from this graph, it's positive. Overall net position has continued to increase since 2017, and liabilities has continued to decrease, even with, you know, the additional bond that was issued this year for the miscellaneous concrete projects. You know, when we look at this, and I know, Burke, you had a question last year, you know, regarding debt. I think when we went back to the office and we talked about it a little bit more after last year's presentation, you know, is the debt in Sydney a little higher than you're maybe going to see in Gearing in some of those places? Yes, it is. But again, this graph shows that it's not concerning. I mean, things are trending in the right direction. I think the one thing that we have maybe talked about is, and I know with the current bond that was issued, I think I understand why that was done, is because you guys wanted to time out the payments of that project with the money that you're collecting to fund that project. But, you know, there are some other liabilities that have been taken on, like with leases at the golf course and some of that stuff. You know, I think anytime you guys do talk about taking on new debt, you know, like I said, net position has increased significantly. And when we go back to balance sheet of the government-wide and you look at, you know, $22 million of cash and $9.6 million of equity and pooled investments, and then you can kind of ignore the restricted cash. But there's plenty of cash reserves there too, you know, so at what point does additional debt, like a lease agreement through, you know, for a mower for the park or the golf course, does that make sense when the cash is sitting there to just go ahead and pay for it without the financing agreement in place? So that's all I really had on government-wide. These next two financial statements, these are what we refer to as the fund financials. So this first sheet here is the governmental funds. Again, general fund, street fund, projects. It shows the major funds here, and then basically the other governmental funds are grouped into one here. I think these financial statements are a lot more useful. One, because it shows things by fund. Two, they're just a lot easier to read. I mean, you can go through the general fund.
Yeah.
What's that?
Amen to that.
Yeah,
That last
yeah.
statement of activities does.
Yeah, that's kind of the go-to, especially that's when we go and do these at the schools, you know, I kind of just skip over the government-wide and go straight to these because I just think they're more useful. Because you can see, you know, general fund collected $4.1 million in taxes, and you can just go down the list and it stands out a little bit more. You know, the general fund spent $750,000 in capital outlay. Capital projects spent $2.7 million in capital outlay. Which that is mostly that miscellaneous concrete projects and the Forest Street projects. So one other big difference between this financial statement and those government-wide is this is basically focused on the flow of current financial resources and takes a much more short-term view of, you know, the financial results of the city. So whereas in that, you know, first financial that we looked at, when there's, you know, these large capital projects here, those are capitalized and depreciated, and bonds, you know, when you make those bond payments, that's reflected on the balance sheet through principal and all of that. Here it shows, you know, capital outlay as an expense, bond payments as an expense. So it shows, you know, kind of where the money is going in the short term. Again, just a lot easier to read. So as far as the governmental funds go, really the main takeaway is general fund, capital projects, debt service. Those all operated at a surplus in the year. The only one that did have a loss this year was the street fund, $458,000. And again, that was because there was a transfer out of about $1.6 million. Not all of that is capital projects, but $1.6 million transfer out of the street fund into the capital projects fund, because that's where that Forest Street project was taking place. So again, all funds operated at a surplus with the exception of street fund, which was almost entirely driven by the Forest Street project. So for proprietary funds, again, now you can see electric, water, sewer. Electric collected almost $9 million in fees. Water was 1.7. And again, you can just kind of go down the list and see where the money in each of these funds is going. Again, the only fund that operated at a loss was the water fund. Again, that relates to the water fund's, assets related to that, the capital outlay related to that Forest Street project. Part of it was funded by street, the bulk of it was funded by street, part of it was funded by water, the water fund. So this last graph here, this is just kind of showing, the overall trend in those proprietary funds. So this is just income and loss of the funds, since 2015. And there was a while there where the sewer fund and landfill fund was operating at a loss. I believe 21, 22, that's where you guys did make some rate changes there. So now, the last several years, that's been operating at a small surplus. So the big thing that stands out here is the electric fund. Obviously, that's what's making all the money in these proprietary funds. But there are reasons for that. When it comes to new capital outlay in the electric fund, that stuff is very expensive, so it's important to build those reserves in that electric fund. And then talking with Kagan and David in our exit conference, it sounds like the cost of the power that you guys are purchasing is about to go up a lot too. So, the good news of seeing this here, when you have a big cost, increase in the cost of your power, is there's room to absorb that increase without automatically having to go back to the utility customers and pass that increase on to them. There's obviously some room to absorb that. We have some cities that they see those increases, they may outsource their trash. They're not billing enough to cover the cost of that contract to begin with. And then all of a sudden the trash company comes back and increases 7% and they're already behind. And now they have to go and ask their, tell their citizens that they have to do a 10% increase this year. So good news is electric fund isn't in that position with these expected increased costs in that fund. Then this is really the last thing I want to touch on here because I think it's going to be pretty important next year. So each year, Kagan, previously Lane, would have to go through and identify all of your federal expenditures that you've made over the prior year. So the last several years, when it comes to federal expenditure, so a large chunk of it, this top part, that's the transit system. This is ARPA funds, and these are two other small miscellaneous grants. But the threshold for having to have a single audit, which is basically a compliance audit of federal expenditures, in addition to the audit that we're already performing for you guys. The threshold of what requires that is $750,000. So the last however many years, I don't know if the city's ever had to have a single audit, but you guys have been under that $750,000 threshold. The good news is, starting with this current fiscal year we're in, that threshold increases to $1 million. So that's good news. So we have some clients that have always been really close to that $750,000 threshold. We may now be able to get away without having to do a single audit, which you don't want to do a single audit because it's just additional increased costs, additional increased work. But even with that $1 million increase increase to $1 million that we'll have next year, I do think next year you guys may have a single audit. I say that because you guys are kind of expanding, your transit services, which a large portion of that is funded with federal money. You guys have kind of been sitting on that ARPA money for a while now, but the plan, as far as we know, is to basically use the rest of that up to help fund that wastewater treatment plant project that's coming up. And I think that's around $500,000 in ARPA funds. You know, we're already talking maybe 350 or more in transit funds. And then I believe that Northside Park project, is that also federal money?
Some of it is like grant, but,
It's a USDA grant.
Oh, yeah.
yeah.
So with all three of those big projects, you know, the transit, I guess, is kind of ongoing, but the wastewater treatment plant, that Northside Park project plant, you know, it's something you're gonna watch really closely, be on top of those federal expenditures, because you may go over that $1 million and be required to have a single audit. Ideally, you know, those projects get spread out enough over a couple of years where you fall under that and don't have to have it. But I just wanna bring it to your attention because, you know, when it comes to a single audit, what we're basically testing there is compliance with the federal programs. So, you know, you guys, as a city, need to be on top of that, and not only making sure that you guys are in compliance with all of those federal programs, but you're also documenting everything, you know, with federal programs. So, you know, if it's a project like the wastewater treatment, and you're having contractors come in and do that, you know, make sure Davis-Bacon is in place, those types of things. That's just one that you don't want to mess up on, because it is federal money. It's kind of a big deal. So that was really all I had for the audit presentation. Again, you know, I think the main takeaway is that anytime we do these that you guys want to know is how did things go. Again, the audit went smooth. Everybody was very helpful. Didn't run into any issues or have any major disagreements with management. And financial-wise, you know, things are trending in the right direction. You're not going over budget. Debt is going down. Those are kind of things that we want to make sure to communicate to you guys. So, any questions? Okay.
No?
Quick question. Your name is Trevor? Trevor.
Oh, I think the only thing I didn't mention is after you guys approve the audit tonight, you'll just want to make sure that David Urquagan gets the audit submitted to the state, which is due March 31st.
Okay. A motion to approve the audit.
I'll make the motion to approve the audit.
Second.
Bonnegar,
Yes.
Coons,
Yes.
Radcliffe.
Yes.
Well, city manager is not here, so comments by the department. Lori?
Thank you, guys.
Yeah, thank you.
Thanks.
Kendra, do you got any comment? Or
I do not have a comment.
Sam?
No, sir.
Autumn? Kagan?
Just want to thank Browner for their hard work on
Yeah.
that. You know, we appreciate their help going through that audit and these times, so definitely appreciate that. I did just speak to the USDA grant. It is a game and parks grant, so just.
That's what I was thinking too.
Yeah.
Yeah, so it's so federal, but tonight you're sitting at 18 views, so
Ah.
but that's all.
Dean? Rob?
I have nothing.
Burke?
Nothing.
And I have nothing. So we will do a meeting adjourn at 5:59. We are done.